Now let's welcome in Todd Rosenbluth, Head of Research at VettaFi. We're talking about some ETFs. First, let's talk about those more passively managed ETFs, which really were in vogue, I guess I should say, over the past few years. Is that something that is now going out? Are people continuing to?
Well, we're seeing continued adoption of ETFs, and in fact, Vanguard just hit the $2 trillion mark in U.S. ETF assets, according to VettaFi data yesterday. So that's a huge milestone. Vanguard, of course, has the Vanguard 500 ETF, VOO, the Vanguard Total Stock Market Index ETF, VTI. Those are the two flagship products that have continued to gain assets. But what we're seeing in 2023 is greater adoption of actively managed ETFs. These represent about 5% of the overall ETF pie. In 2022, they were approximately 15% of the overall assets. But what we're seeing, and in fact, when we talk to the VettaFi advisor base that we talk to on a regular basis, they are increasingly looking and interested in actively managed ETFs. You can see here on the screen a survey we did of the VettaFi advisor audience, and 87% are either somewhat likely or very likely to be adding to actively managed ETFs in 2023. That's a really encouraging sign for many firms that are out there. That's a sign, again, that advisors are more comfortable with the stock picking ability that you can find in an actively managed ETF.
You absolutely are spot on talking about the Vanguard ETF, which reaches $3 trillion or $2 trillion in assets under management. But let's talk about the more actively managed ETFs. What kind of other trends are you seeing in them? Are you seeing any kind of trend when it comes to possible industry exposure?
Well, so that's the benefits of active management. So we tend to find advisors are looking towards some of those broader market strategies this year. So JEPI, the JPMorgan Equity Premium Income ETF, this is the largest active equity ETF. Is continued to gather new assets. It takes a more defensive slant, and you can see here it's brought in over $4 billion of new money in just the first 2 months of the year. That's on pace to accelerate past what we saw a strong year in 2022 of $13 billion. But we've also seen products like Capital Group's Growth ETF, CGGP, which is a more growth-oriented ETF tilted towards the technology sector and some of those higher growth areas of the marketplace. Capital Group just entered the ETF market just over a year ago, and their products, the stock picking that people are familiar with through the American funds, continues to gain ground. We've seen Avantis, we've seen Dimensional Funds have success, and newer firms, in fact, even BlackRock has filed for a large cap value ETF that will likely launch by the end of 2023. So really exciting times to be covering the ETF marketplace. A lot of great choices for advisors to consider.
As far as why advisors and investors are going more into the actively managed ETFs, does it have something to do with interest rates, the fact that they're ticking up, or anything else?
It certainly does. I think the prior segment you had about Jerome Powell and the change in sentiment, where we might see higher interest rates throughout the year of 2023. This is a really difficult marketplace for advisors on their own, for investors on their own to navigate. And so they're turning to the stock picking or the asset allocation macro calls that an active bond manager is providing. And you can get the benefits of an ETF, the liquidity, the tax efficiency, the availability, but that you normally want through an ETF, but get the security benefits of using an active ETF. So this is a good environment for active ETFs, and we think it's going to continue as 2023 persists.
Now, you did mention a few small cap ETFs, but are there any other small cap ETFs on your radar?
Well, we're seeing greater adoption and interest in small cap ETFs. We separately did a survey of advisors and asked them which of the investment styles in the U.S. equity marketplace they were most interested in, and small cap rose to the top. Small cap products like IJR, which is the iShares Core S&P 600 ETF, or Vanguard Small Cap VB. Those are some of the more popular ETFs that we're seeing on our VettaFi platforms. Advisors are increasingly looking at those ETFs, and you can see we've had a nice bounce back with IJR to start 2023. Small caps are outperforming large caps, and that's something that we've been talking a lot about at VettaFi.
That's good to note. Are there any large caps that are performing well that are popping up on your radar too?
Well, we're seeing that investors are turning towards growth at a reasonable price. And so SPGP, which is an Invesco S&P growth at a reasonable price ETF, it looks for some of the faster growing companies, but valuation is mindful. This is an ETF that we're seeing greater interest in as we do our due diligence on the VettaFi platform. Many advisors are turning to. This is an ETF that has been one to watch to start 2023, and we think we're going to see continued interest in this growth at a reasonable price Invesco ETF.
Todd, I think that's a great place to leave it. Thank you so much for joining us, Head of Research at VettaFi.